and welcome. You're watching Business Today TV. I'm Sakshi Batra. Well, loan borrowers may need to brace up for higher interest rates as the RBI may be all set to raise these interest rates yet again this week when the RBI's rate-setting panel, the Monetary Policy Committee, which will sit again on August 3rd, and it will be a 3-day meeting to deliberate on the interest rates. It would also have to deal with two big elephants in the room. One, high inflation, and second, global recession. Now, domestically speaking, the RBI, remember, has a tough task of keeping inflation within that 4 plus 1, plus 2 and minus 2 percentage range, or that 6% band. But lately, despite all the best efforts that RBI has done, inflation has still remained defiant and above the tolerance band. Now, with retail inflation ruling above 6% for 6 straight months now, the RBI had already raised repo rates, the Brahmastra that it talks about, to tame inflation twice already, by 40 basis points first in the month of May and then by 50 basis points in the month of June, raising it to 4.9% now as the repo rate. Now, despite this, in June 2022, we actually saw that the CPI, or the retail inflation, that was at a high of 7.01%. And the wholesale price index was at an all-time high level of 15.18%, this wholesale price index inflation, or the WPI inflation. Now, for the year 2022-2023, the RBI already seems to have admitted that inflation might stay above the 6% mark and maybe settle at 6.7% later on. And therefore, it is expected widely that the RBI may go in for the third consecutive policy rate hike. Now, that could be in the range of a wide 25 basis points to a 50 basis points, as has been discussed among the intellectuals and the interest rate watchers, the experts, the bankers, all of those people as well, and the economists for sure. The existing repo rate, what we are talking about, the 4.9% mark, remember, this is still below the pre-COVID level of 5.15%. So the RBI could actually well raise it to even 5.15%. Experts are of the view that the RBI could actually raise the benchmark rate to that 5.15% mark in this meeting, or in this week, or in the subsequent weeks, and perhaps raise it further as well. The other important thing to note here is that the RBI is expected to make comments on the economy's growth. Now, remember, this would be at the backdrop of US economy slipping into technical recession, 2 quarters of negative growth or shrinking growth. Now, while the Indian economy faces no or minimal risk of recession at this point in time, as has been discussed widely by the experts, the growth potential of Indian economy, remember, is not immune to global recession. Though most of the agencies still believe that India might grow at a pace of over 7% in FY23, the rate of downgrades should be a cause of concern that we've been constantly seeing, latest by the IMF as well. Now, the RBI has so far maintained that India would grow at a 7.2% mark. The experts believe and will be keeping a keen vigil to see if the RBI does any tweaks to this forecast, also if there are any tweaks to the inflation forecast and the impact of normal monsoons right there, if there is any cool-off impact on the high inflation and price rise as well. Other than this, what will be important to see is that what RBI really on the rupee depreciation front. Remember, the RBI has been stepping in to prevent the rupee breaching again and again that 80 psychological level as well of the rupee. But going forward, what is the trajectory that they expect for the rupee to trade in? That's going to be an important watch again. Notably, any change in RBI's repo rate will definitely have an impact on the lending and the deposit rates of the banks. Now, if the RBI raises the repo rate, the outcome will be a direct impact on the loan borrowers. And since banks and NBFCs all would have to pay higher for their borrowings, they will perhaps raise the EMIs as well. The banks, the housing finance companies may raise their lending rates in response, resulting in an addition of your existing EMIs too. So all your home loans, all your auto loans, and all your personal loans may be all set to become costlier in the coming days. Whereas depositors, however, can actually hope to cheer if the banks pass on the benefit of the rate hike to the depositors.
If you like the video, do like, comment, share, and subscribe.